Special segment Quarter Se Quarter Tak. We bring you earnings expectations from each sector. Today we'll tell you what the cement sector could look like in this quarter. Nigel, over to you.
Well, for the past quarter, cement demand remained strong, but prices declined. But the lower prices, well, they were partly offset by input cost tailwind. Let's take this piece by piece then. On the demand front, January was weak due to weather and pollution-related restrictions, but there was a growth pickup in February, and March was the strongest month. Volume growth is likely to rebound in Q4 on account of heavy discounting push by companies and also a pickup in year-end construction activity. The street is expecting the industry demand at around 8 to around 9% in Q4, which is a big improvement on a sequential basis. For the year, well, the derived volume growth for the industry is likely to be around 9% odd. On a regional basis, South was underperforming, while West as well as Central India, well, they were the best performing regions. Cement prices declined continuously for around 5 months after the price hikes that were taken last in September to October 2023. Realizations in Q4FY25, well, they're expected to plunge by close to around 5% on a sequential basis, despite being a seasonally strong quarter. Prices were impacted by what? By intense price competition among the larger companies as they were trying to gain market share. The highest decline in prices on a quarter-to-quarter basis was seen in East India, which was at around 8% odd, which was followed by other regions, which is in the vicinity of around 3 to around 5% on a sequential basis. But spot international coal and petcoke prices in March, well, they reverted to December 2023 levels. But they're still 5 to around 14% lower in comparison to the averages that we saw in Q3 as well as in Q2. The operating leverage on a quarter-to-quarter basis and flat to declining variable costs, that's what's going to keep the overall cost for the universe under check, declining by around 4 to around 6% on a Y-on-Y basis, and sequentially as well. Well, Jefferies expects stocks under their coverage to see EBITDA per ton dip of around 110 rupees per ton, that's on a sequential basis, but it will grow by around 125 rupees per ton on a year-on-year basis. The EBITDA per ton for most companies will show a growth, with ACC best placed due to the easing cost, volume growth from the recent capacity additions, and also benign valuations in comparison to its peers. Part of growth on a year-on-year basis is because this EBITDA per ton is coming on a very, very low base. Well, Jefferies has put their expectations of the potential out and underperformers for this past quarter. Among the larger peers, well, they expect the highest year-on-year growth for Ambuja at the consolidated level, while Ultratech and Shree Cement are expected to grow by around 18 to 27% in terms of EBITDA growth. Among the mid-cap names, well, Dalmia could potentially underperform with a sub 10% growth, while JK Cement as well as Birla Corp, well, they could outperform with near 50% EBITDA growth. Well, let's wind this down with a quick valuation check, and the snapshot comes up for you on the screen with the valuations as they stand as of now. Well, given that we are in the midst of a general election activity, we could see some slowdown in terms of demand, but the key to track from here on will be price increases that are pushed through, how much of that is absorbed, and also the demand recovery that the street is expecting in the second half of this fiscal.
All right, Nigel, thanks a lot for that. Navin Sahadeo, the analyst at ICICI Securities, is joining in now to tell us what to expect. Navin, Nigel put it very well on what you can expect from the sector this time around. But your thoughts, which are the companies that you think could sort of outperform this time? And in general, what are the growth trends looking like?
So, of course, Nigel did put it very aptly. But from a growth perspective, I think largely concur that in the large cap space, it's Ambuja Consol, which we think is much better placed. There's a low base effect also to that. And in the mid cap space, then we look at JK Cement, which is very comfortably placed in terms of industry superior volume growth and hence the overall EBITDA performance.
Okay, hi Navin, good morning and good to see you, Vin. I mean, we have Kesoram Industries, and that's a very small player, and the real play is going to come once it gets folded into Ultratech Cement. But the last quarter's numbers, if you look at it on a sequential basis, just doing some basic math, the derived EBITDA per ton, it declined by close to 200 rupees on a sequential basis. It could be company-specific issue as well that did play it out there. But what is your read-through for the industry? What kind of a decline are you seeing on a quarter-to-quarter basis on EBITDA per ton?
Yeah, so first and foremost, we should all take this into cognizance that quarter-on-quarter decline in a March type of a quarter is rare. So indeed, we are looking at a very unusual kind of a busy season for this. And our estimate is that EBITDA per ton broadly for the coverage universe should decline by about 14 to 15%, which is anywhere between 100 to 130 rupees per ton quarter on quarter decline is expected.
Interesting. Navin, what about the cement story now? As you and most analysts as well are expecting, quarter four will be par for the course. We're already anticipating a decline in the EBITDA per ton. For the first quarter, elections will slow down activity. For the second quarter, you have monsoons that will play out. So now I think we are looking at the second half of the year. For the year, though, given that the second half should be much stronger than the first half of the year, what kind of demand growth are you factoring in? Because we did very well in the first half of last fiscal.
Correct. So typically post-election, our latest precedent is that FY19, your industry grew 13%, but in FY20, it was flat, even excluding the impact of COVID right in the month of March. So definitely not expecting that bad a scenario, and there is no that high a base as well. So against a 9% or 8 to 9% kind of a growth for FY24, FY25, my estimate is more like a 6% kind of a growth. And of course, as you rightly put, it would be mainly from Q2 to the balance Q4, as in for the balance of the 9 months, excluding Q1, which is impacted by volumes or elections.
Okay, all right. Navin, also there has been this debate about this price increases. You have been tracking it for a little longer than me as well. But we see in April, you have a price increase that's pushed through somewhere in the, towards 10th of April, towards the 20th of April, some kind of price increase. But the better sense you get is, as you approach 20th, how much of it is absorbed? How do you read this? How much of a price increase was attempted to be pushed through? Some reports were suggesting 70 rupees, 80 rupees odd, which is unlikely to take place, right? Because demand is yet to pick up substantially. You have elections as well that are on the offing. So your analysis, how much of a price increase actually got absorbed in April so far?
Yeah, so there is definitely, so far there is a disappointment on the, first of all, the quantum of the price hike itself, and second, also on the absorption of it into the market. And as you rightly put, because typically first 10 days of April have enough and more inventory in the system because of some volume push that happens towards the end of March. So to expect a sharp price hike in first fortnight of April is a challenge. But on the other side, I would put that the quantum has also a bit disappointed to me. They've been talking about some 30, 40 rupees, but in effect, what we're hearing is just about anywhere between 5 to 15 rupees kind of a increase. And broadly, 5 to 10 only has got absorbed so far is what our understanding, which is a little underwhelming.
Okay, all right. Final question then, Navin, before we let you go. Tomorrow we have Dalmia Bharat that comes out with the serum numbers. And some of these companies, in the run-up to their numbers, they've already seen weakness. If I'm not mistaken, I think Dalmia Bharat is down 15% year-to-date as it is. And today as well, the stock is under some pressure. It has some South play, some East play as well. And Kesaram's numbers were fairly disappointing. How much of the bad news is already in the price? And what are your top picks from the sector?
So I think the entire cement pack is off peak. Most of these stocks, I would say, are down anywhere between 10 to 15%, some of them even more. So no single stock is trading at a peak, market cap, so to say. And that's largely got to do with the disappointment on the pricing front, and which has been there throughout. Right from November, there has been a very sustained decline. So price hikes happening anytime, I think till month of May, are extremely critical to give a support to the FY25 earnings, so to say, and hence they are to be keenly watched. And my top pick in that sense would still be an Ambuja Cement, because that's where I think there is enough and more ammunition for cost efficiency to come through, both capex and non-capex led. And also the recent promoter fund infusion that has happened, they are sitting on a big cash. So we would expect industry superior capacity growth also from them. So top pick is Ambuja Cement.
But between the two, some are finding more comfort with ACC because of the valuations. Though we know in the past, Ambuja has always given superior numbers, and as you're saying, volume growth will be superior as well with the cash balance that they have.
I completely agree. Valuation is comforting in case of ACC, but I would still go with playing the ACC story through Ambuja Cement, because I would like to believe that bulk of the expansion is will come through in Ambuja, and the fund infusion also has happened in Ambuja and not ACC. So Ambuja is my pick in that sense.
Okay, and what about the South companies? Some of them have been beaten down quite a bit. Companies like Sagar Cement, India Cement as well. And when they come to a particular level, then we start putting that valuation argument, the replacement cost, the EV per ton. And if you get some price increases that come about, and some of them, at times, they rebound very sharply. From the South Pack, what do you like?
So we have, from the South Pack, we cover India Cement and Ramco, of course, and we have a positive view on Ramco, largely owing to the fact that it will have an industry superior volume growth, and of course, the largest beneficiary of any price recovery that may happen in the South and Eastern region. India Cements is largely more of a M&A play. So we have it's completely hypothetical to say if the deal happens or not. So we'll largely, we have a sell rating on the stock, and we'll maintain that.
Okay, let's see when that M&A does take place. Navin, for the last few years, plenty of rumors in the market that something's coming about. It hasn't yet, but for the time being, we'll take all your points with regard to the cement industry on board. Thanks a lot for joining in and giving us your view. So the past quarter could be a little bit subdued. As Navin said, they are factoring 100-150 rupee decline in the EBITDA per ton, which will be par for the course. But their top pick will be Ambuja Cements because of the cash infusion. There could be some capacity expansion, and they believe that's the better way to play it from both the Ambuja and ACC twins. For the